Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to Forecast Update Live, a video series from EverAg Insights, where each month we gather to discuss our dairy market forecast. I'm your host, John Spainhour. We're joined today by Erica Maedke, Matt Gould, and Plourd. To get us started, Erica, please run us through the highlights of this month's forecast as compared to last.
Good morning, John. Happy start of summer. As we think about our forecast, we have made some pretty big revisions this month. I'd say two big factors. Some of the new capacity has been a little bit slower to come online. So the cheese that many were expecting to be here, including us, isn't quite here yet. The other piece to that, I would say we've had some very strong reports of exports, both cheese, butter, powder, and that has kept the domestic market a lot more cleaned up. So as we think about the rest of 2025, we've significantly moved up our cheese and butter numbers. Whey has also gotten a tick higher. As we look at 2026, we're getting close to 18 months out to the end of 2026, expecting to see a little bit of softness in that butter powder complex later in 26.
All right, thanks, Erica. Every month, we ask our panelists to take either the bull side of the story or the bear side of the story. And this month, Erica has agreed to take the bear side of the story. So, Erica, take it away and let us know what you're seeing out there.
So as I had mentioned, some of the things that we changed our forecast because of, one, cheese plant and other plant capacity expansions a little delayed. I'd say first off, they will get here. So it may not be today, but everybody's working very hard, I'm sure, to get those plants up and running, and the cheese will come. So I think that's the first piece. The other piece on the export side of things, so as you think about what could slow down exports out of the United States, and I see a lot of the market strength right now originating from Europe. And there's been concerns about drought. There's been a slow spring flush to really get product coming out of Europe. And the buyers there are nervous. So as we think about what could bring on more milk flow, in particular out of Europe, the weather is starting to look better. So again, drought concerns. There is rain in the forecast coming forward. And we also see higher pay prices at the farm level. So with that, we might be able to see some more milk coming out of Europe, which should ease some of that buyer anxiety. And just globally speaking, yes, New Zealand is in their slower season, their winter. They will come out of winter. And right now, the pasture conditions there look good for a start of the next season. And don't forget, sometimes South America can get sneaky, and their numbers are looking really good right now, too.
Don't forget U.S. milk production, right, Erica, too? That's something that quietly we could see milk production up 2% here before too long.
And that might be conservative.
Yeah.
Especially if you look at margins at U.S. farms right now, just margin over feed, $12 a hundredweight or so, then add on revenue from cull cows, beef calves. There's definitely profitability on the U.S. space that could push a lot more milk here in the U.S.
All right, well, thank you, Erica. Okay, Matt, you've decided to take the bull side of the story this month. Let us know what you're seeing out there.
Yeah, thanks, John. I think coming into 2025, we all knew that the domestic environment was going to struggle. The U.S. consumer has been weathered by inflation. You know, as Eric had mentioned, we knew about all these new cheese plants coming online. I know in our shop, we had talked a lot about the new farms being built to align with these new cheese plants. And I don't think any of that has changed. The domestic situation is, I think, at best neutral, and maybe at worst, as Erica had said, bearish. The bullish story today isn't really about anything going on here at home. It's about what's going on outside the U.S. And as it sits today, the U.S. is on sale. Our cheese prices where they are currently sitting 30 to 40 cents cheaper than the rest of the world. If you look at the high protein markets, we're still cheap. And if you look at the butter market, even with the most recent price rally, I mean, we are still cheap. We're sitting more than $1 below international price levels. So the bullish scenario is really about, exports, and it's about us winning market share in the global marketplace. One thing that I have started to hear more about is international food service buyers talking to their U.S. suppliers less in transactional terms and more in partnership terms or strategic partners. And the reason for that is because if you look at where the milk supply growth is occurring and where the investment, which is now totaling billions of new processing capacity. It's all here. So strategically, we're positioned to win those exports. And it's also been true that the international market has been much more resilient than I think any of us expected. We know that the US is taking market share, for example, from Europe in both butter and cheese. And even still, their prices have not flinched. So at least as it sits today, if I were to summarize the bull case, it's all around our prices being supported by fundamentals overseas. And on the highlights of that list, I would include that there's just not a lot of surplus milk being produced in Europe, that there's a consolidation of the Chinese dairy farming sector. And as a result, their markets have stabilized and we're starting to see them import more. It's all these global phenomenon, lifting our prices higher.
Well, thanks, Matt. And as we said last month, domestically at the demand side of things, people haven't felt great. Those that are international facing have been quite bullish, and it has been a real meeting of the minds, if you will, sometimes, and really watching those two economic forces battle it out.
Well, yeah, and I think even as you look forward, as Erica is saying, we're going to see 2% plus potentially growth in the U.S. I don't see that changing. Like our market, at least domestically speaking, looks well supplied. The bullish setup is just, that the rest of the world isn't.
Okay, I look forward to this part every month, and that's Phil's favorite look. Phil, you always bring us something really interesting to think about. Let us know what you're seeing out there that's pretty interesting this month.
I'm going to put some pebbles on the bullish scale for Matt this month. Our favorite look this time around is US dollar weakness. And it's a 180-degree change in direction from what we've been talking about a year ago at this time, which would have been how US dollar strength was a net negative for US exports and blah, blah, blah. Where today, the US dollar index is down 8% year to date. And if you look at the currencies of some of our major export customers, Japan, the yen is up almost 10% year to date. South Korean won is up more than 8%. And so in a world where we see US dollar weakness, that is another reason America is on sale from an export perspective, because our customers, they don't get more bang for their buck. They get more bang for their yen. They get more bang for their won. They get more bang for their peso. And so the weaker dollar makes U.S. products more competitive in the world marketplace, the weaker U.S. dollar. And it also impairs the competitiveness of our competitors. As the euro strengthens in value, that hurts European exporters. And so from a cheese market perspective, butter market perspective, and a skim perspective, on balance, a weaker U.S. dollar is bullish. And something to keep an eye on is the U.S. dollar index. We've been battling out at key support on the price graph between 99 and 100. If we break 99 convincingly, this could even get more dramatic in the months ahead. It's kind of hanging on at this key support level today, which is producing, an 8% year-to-date decline. If we break below 99, that U.S. dollar index, it could take another leg further.
Phil, it's so interesting because currency is obviously a huge part of international trade, but it's just not something that's necessarily at the forefront of our mind all the time.
And it may not be the most important thing, but it shapes the pricing landscape.
It certainly is a factor, and it's one to keep an eye on. So thanks for bringing that to our attention. Okay, that'll do it for this month's episode of Forecast Update Live. Thank you to all our panelists, and thank you to everyone on the EverAg Insights team for their work on the forecast. And finally, thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share with a friend. We'll see you next month for another edition of Forecast Update Live.